Hey everyone, it is Evan here from the Trade Risk on Tuesday, October 9th, here with a midweek market recap video. We're going to cover all of the major markets and the current market environment. So we're going to jump right into the charts here with the S&P 500 cash market weekly time frame. This is where we like to start our analysis, and it's been a pretty quiet week so far. It is only Tuesday, but we are flat here on the week for the S&P 500. If we zoom in a little bit closer here, you can see we do have a bit of a tail on the bottom end of this weekly candle that is still in formation right now, but buyers have kind of stepped up here and supported price below last week's lows as of right now. And this is an important area. We've been talking about this level relentlessly here over the past many weeks. This 2872 area, that was the prior highs back from January in this market. We broke out in August. We checked back to it, found support. We rallied up to new highs, and now we have failed and we are back down to this breakout zone around 2872. I continue to believe that this is a very important level for the market to hold, to keep the structure intact here, and even for the longer time frames. So as it stands right now, the market is holding in exactly where it needs to, but the week is not over yet. This weekly candle is not finished. So let's see if we can continue to see support demonstrated here until Friday. And for the bulls, best case scenario here, we would get a thrust back up in towards these prior highs. So if we go down to a daily chart now, and we look a little bit closer at this action, again, we saw the wide range yesterday. We saw some more initial selling pressure to start off the week on Monday. We traded all the way down to about 2862, undercutting Friday's lows and also undercutting the lows here made in early September. But as we discussed, we did find some support. We reversed and we closed near the highs of the session. And now on Tuesday, it was pretty much a lackluster, very quiet session. We tried to continue higher here. You can see the tail on the top end. Bulls really couldn't just muster up enough strength to get a continuation day to the upside, and we closed well within yesterday's range. So when we look here at the S&P 500, it is in a vulnerable state here. We do have a period of 4 or 5 down sessions. We have a short-term downtrend line that is intact here from just Wednesday of last week. So we do want to see us breaking above that if you are in the bull case, and you want to see this 2872. You could cheat it down to 2865, 2870 or so. You want to see this these general lows here hold before we break down and start looking at some levels that are further down below us around this 2800 level. That would be the next major milestone that I would be paying attention to. So once again, kind of mixed signals here. There's some caution advised in the short term for you quicker tactical traders. Maybe you're looking at a good spot to jump in here if we can see this support hold. Nice tight risk defined entry here below, say, yesterday's lows for a move back up into this range. That's certainly a possibility here that we can be looking at. If we start to lose these lows, certainly all bets are off on that trade. When we go to the Russell 2000, still just cannot catch a bid here. We are still above Friday's lows. That is, mildly constructive here, but this downtrend is still very steep. We are extended to the downside here, but momentum on this leg down here has been quite fierce, and it is not really letting up at this point. So we do have this downtrend line that we can pay attention to. And when we zoom out here, I know it's a busy chart, but there is sort of a confluence here around this 160 area. You have a nice round 160 IWM number. You also have this longer term trend that comes in play from multiple months, and you have this horizontal level, which were the highs back here from earlier in the year. So there's lots to kind of look at here around this 160 level. Not sure that we get there, but again, that would be a good spot to find some type of bounce, especially if we reach it in some oversold territory with multiple days down in a row. I think tactical traders could look at that to play for some mean reversion. As it stands though, structurally, this is a tough spot here for the Russell 2000 weekly chart. Again, you can see that nice expansion in range to the downside last week, 3.7%, and we are still down so far on the week as it stands right now on Tuesday, still above last week's lows. Nasdaq 100, if we look here on the weekly time frame, looks similar to the S&P 500. We saw our initial weakness, an initial undercut of last week's lows, but we did see some stabilization there, and bulls trying to reverse us just a little bit. If we look now at the daily chart, you can see this 178 area, a little messy in here, but this did act as support back here in mid-August. This was the highs back here in June, and the market is at least responding to it as of yesterday and now holding above it today. So for the Qs, very similar to the S&P 500 analysis, we'd really just want to see last week's lows hold. You want to see this general area hold before it gets ugly and risk starts opening down to these lower levels. We do have some more minor levels of support here. So around this 174, also around this 171. These have been levels that the market has cared about in recent past. So we do have a couple of other nearby prior reference points to pay attention to, but I still think this would be a good spot for this market to hold to prevent some further damage there. So that is really the market environment as a whole. It's been pretty quiet right now, but still some cross currents, mixed signals here. Short-term trends are still lower across the major averages, and we're waiting to see if the worst of that selling is at least over for now, and if the markets can find some type of relief rally, some type of bounce here for the rest of this week. So that is the current market. Let's take a look at some other major markets. We got TLT here, which did get a nice bounce back today, 1% to the upside. This was pretty quite extended lower here after breaking down in a pretty key level of prior support. This multi-year level around 116.50, 117 broke down last week. High volume, 3.61% to the downside. Talked about the short entry that we put on at the beginning of the day here on Wednesday. We do still have that position on, so we are still short TLT right now. We took 50% of the trade off last Friday. We still have a trailing stop that is coming down here, so we're looking to see if this results, this pullback that we saw, or this bounce that we saw today, results in some type of lower high and then a possible rollover. That's what we're looking for, of course. And if this does continue to rally all the way back and start to reclaim much of this latest leg lower, then we will stop out on the rest of this position. So TLT, nice bounce back here. Let's see if the bulls can continue it tomorrow, and we'll be looking ultimately for a move back above this 117 area, which seems unlikely at this point, but that would certainly neutralize and negate this big breakdown that we saw last week. At this point, sellers do seem to be in control. Finally, or not finally, but next up, if we go to USO, we can see we are continuing in this uptrend here. If we look at a weekly chart, we did close higher last week, but well off of those highs. Well, we're going back to those highs again. We've been up about 5 weeks or so in a row for USO. We are trading just under the year-to-date highs, and we get this nice little pullback. So we pulled back for 4 days, and now we're starting to lift higher again. Still a good amount of volume coming in, so let's see if the bulls can use yesterday's lows in here around 1553 as some type of pullback level. If you're managing risk against that and you're looking for a move back up to these highs, we can see if that trade will work itself out, and ultimately above 15.25 or so, that's the bigger level that I would want to see USO hold above. If we go to natural gas next, this continues to hold up well. Just the same, this has been a monster performer here, very V-shaped, just rocket to the upside over the past few weeks here. Volume's been pouring in on this breakout. Bulls continue to be in control here. The uptrend is steep. The market is extended here to the upside. It makes it very difficult to chase, but momentum is strong here, so it's very tough to want to fight this, or it's just very, very tough to, you may want to fight it, but it's very tough to fight it. You really need to wait for for this to really give way. You still have the MACD charging to new highs here. Let's look for a close or two below this trend line if you're looking for an aggressive short entry. Otherwise, if you're in this on the long side, congratulations, nice trade, and you can certainly trail up that stop and look for this trend to really continue here, and it's been very impressive in the past 3 weeks. Finally, if we look at metals, GLD had a rough start to the week yesterday. Both gold and silver was down 1% yesterday. It was flat flat today. Still hasn't changed the structure here. We do have this longer term downtrend it's been in for the past 5 or 6 months, followed by this sideways consolidation, and this consolidation is still arguably very much in shape here, going sideways in between about 111.75 all the way up to almost 115 or so, trading in just a few point range. We'll see if that does change. If we start to take out these lows here towards the end of this week, that could be a pretty ugly development there for the gold bulls. But as it stands now, still consolidating. Let's take a look. Let's keep an eye on this range and just see if this lower end of support can hold. You can see the MACD is trying to get into positive territory here, but just inching and trying to bump its head against there. So be interesting to see how this one shakes out as it's gone sideways for a pretty good amount of time now. Silver, essentially the same situation, not as clean. We don't have such a nice orderly sideways consolidation. We've got a little more of a drift higher. We did get the MACD to push into positive territory, but we quickly gave some of those gains back yesterday on Monday, down 1.6%. Flat line today. We're still in positive territory, but if we don't fill this gap and start to get back up towards these highs, I would expect the MACD to cross down here. But ultimately, very similar analysis to gold after moving sideways and just seeing some compression here over the past few weeks. We'd want to pay attention to the relevant highs and lows here to see if there's an actual trend change or if this turns into some type of continuation pattern that heads lower. So that is the way I'm looking at the markets. Hopefully you're off to a good start to the week. It's been a little quiet now, but there are some good levels, some important levels to pay attention to, especially in respect to the major averages here. So make sure you're managing that risk, keeping an eye on that outstanding on those outstanding positions. And we have earnings season, which is very fast approaching, which the market is going to start to point its head to and start to pay attention to as we start to get individual company releases and forward-looking guidance here. That is certainly going to start to impact some of the sectors and certainly the individual stocks. So that is it from me. Thanks so much, as always, for tuning in and watching. You can subscribe on our YouTube channel to stay up to date with all of the latest videos that we're publishing every Tuesday and Friday for the market recap videos. I will see you in the next one on Friday. Thanks so much.